All right, good morning, my neighbors. Welcome to another episode of that BYTTT that you know and love. Don't forget to go ahead and hit that like and subscribe button because it helps the whole algorithm does the thing that I need it to do. And also down below, I still have my $50 discount on all charts, including trading plans, and one-on-ones are still going. Go ahead and get your one-on-one book. That way you can go ahead and become a better trader. That said, we got a lot of work to do, so we're gonna go ahead and get straight to the screen. Now, again, the way I chart is not any type of magic trick. I'm not here to kind of toot my own horn, but the warnings were there, right? I kind of lined everything up for y'all to kind of explain what can happen. And being that it's at what can happen, it's just to prepare you. That's it. So if you were properly prepared, you can make the decisions that you need to make. So let's go ahead and look at NQ. I still have this lines here, and I was telling y'all that we just made new highs when we kind of poked through here, and then I think it was Wednesday when we kind of poked even into this area here. Now the funny thing, when you start to see these lines start to get penetrated and levels and all this stuff, you got to remember they want to kind of short this down. They want to. That's their goal. They're looking to continue to short these targets. And then when you start to get little areas of interest like pivot points and everything else, they want to short them. That's their job, right? Because again, if I'm a bear, I'm going to go ahead and short when I see there's weakness. If I'm a bull, if I see the bears have no control, I'm going to go for your liquidity. I am not your friend. I am a trader. So I'm going to look at what the market sentiment is going to be. And I'm going to go with the wave of the majority. We already know that this is a major uptrend, right? And when we have major uptrends, it takes a micro up or downtrend to counteract it to become a major trend. That's where you get your reversals. So when I drew this line, I was kind of pointing out to everybody that we are making higher highs. We're making a point and making lower lows for the time being. But if the buyers step in at any point, they could overtake them really quick. Here's your retracement, and we had continuation on Friday. It's not a magic trick. It's proper price action recognition and knowing how to mark off your levels. I warned y'all about the order block. We're sitting on top of an order block. The only way we're going to come down is if the order block fails. So when you're going into the market, I'm telling you this right now, do not hope, do not think, just go into what is presented in front of you. Because if it walks like a duck and it quacks like a duck, I'm telling you it's a duck. It's not chicken. All right, just don't do that. So I think Friday was a perfect example in a very microcosm type of way that this is what the market can do to those that are like, and I was getting phone calls, Jeff, how come the market's not coming down? Is that all-time highs? There's no way. The market can stay irrational much longer than you can stay solvent. They will take your money. Just wait and follow discipline and follow rules. Okay, all right, let me go ahead. I think I gave you a little bit of mindset. Let's go ahead and get into this. So here's oil, and like I said, same thing, major downtrend. Drew this two lines right here, and I was like, well, with the inventory coming in, they're trying to push it up, but it doesn't look like they were going to get up anywhere to this 200 movement average. So my fear was that they'll try to break this down. Oil coming down is going to go ahead and test this fair value gap. We're probably going to get $61 oil. Gold still in the wedge. All right, still bullish. There's nothing in here that tells me that this is going to go ahead and tank to the bottom, but they are rejecting it. And that wedge is right there. This is a wedge that's been tested 1, 2, and this is the third time. wedge right here, 1, 2, and this is the third time. Very, very simple connotation here. But JD, that doesn't make any sense. Why would that happen more than this happen, or this happen versus that happen? Stop overthinking it. It's in the middle of consolidation. There's no reason for you to sit there in the midst of consolidation and have to fight with this battle. That's just silly. But if you're a day trader, oh, this was major moves. There was money to be made. Follow it. Just follow it. Just follow it. All right, silver. And this is the other one. I always chart silver. This candle right here, it dragged it down. It dragged gold down, even though that they are trying to get to that $40. I won't be surprised that we get this bearish divergence to do what we needed to do. It comes down, maybe come back to this order block. Look for silver at 36. Probably going to drag gold down a little bit. And instead of it being a pennant, it might be a bull flag. And then it recovers, and then they go attack for some higher highs. Very possible. But don't say that what JD says, as soon as it gets to 36, I'm going to go long. No, that's not what I'm saying. I'm saying look for action to happen there. And if it fits your strategy, congratulations, you got yourself a W. Here is this. This is what's going to be the most telling part, that I think gold and silver is going to shoot up. The dollar is probably going to go ahead and shoot up, and it's going to put some real pressure onto the market because we tend to follow here. This looks like a head and shoulders. If you don't know what a head and shoulders is, let me go ahead and mark this off. It looks like we had a peak, then we had a follow through, which is that, oh, we're making all-time highs or this, that, and third, and all types of funny stuff, right? That's when the market kind of capitulate. Oh, we got to give it a pullback, and it starts to give you that pullback. It's an even pullback, and you're like, dang, that is more than 618 and 50%. We're almost at reversal point. Then it gives you that dead cat bounce, bam, and we should be coming down. There's a strong possibility that this is what's going to happen with the British pound, and we're going to get some extremely lower lows. I'm already keying off, and again, this is this potential. You do not move this trend line until this day makes a lower low. There's our lower low. This is the official trend line. But if this head and shoulder plays, this is the pivot point when they break the neckline. Very simple. So looking for British pound to get into this order block, probably like 1.32, maybe even get to 1.3. It's very possible. We got fair value gaps that pushed us through here, and there could be a whole bunch of people that took their profits. Here's Bitcoin. Again, I am no Nostradamus. I am no psychic, or I am a person that just sees the things that's on the chart, and I just ask, what if? That's it. We had a nice little wedge, and it looked like a bull flag. It failed. That momentum brought us all the way down to here. I told y'all, 115 to maybe even 113 is where everybody's going to be looking at, especially for all my fair value gap traders. What did it do when it get there? There was a price action that happened inside of here, and when that price action happened, what did they do? They bought the dip. We got a nice curl up. I would not be surprised we get to 125. Are we going to get there? No, we got to get through 120 before that happens. That's what this red line is for. Here's the Russell. The Russell is actually starting to struggle a little bit. And I had a feeling I was going to get there because get a little bit of struggle because, again, this is that order block that I was telling y'all from last week. What was previous resistance turned into support that turned back into resistance, and it struggled. So we're back here again from the back of February. So what's going to happen here? We had a nice solid close that was inside of the order block, which was a good sign, but it doesn't mean that it's going to go ahead and push through. So anyone that just said, I'm going to buy it right here because this looks very bullish, they're the ones that's going to, I don't know why I do that voice whenever I'm talking about market capitulation and market sentiment, but they're thinking in their heads like, I'm going to go ahead and hold this out, and then it got liquidated. It's like a tweezer top to a certain degree, and then the momentum came here, and they got a nice solid bounce. Could they wedge against this and push all the way up? Absolutely. Do I think that we're going to be getting out of small caps and getting into major caps? Absolutely, right? But it needs to follow certain rules. I needed to close above here before I put any position in there. That way I can go test for 2,500. And the last one is the infamous, undeniable, the most strength inside of the world, the US dollar that don't play no games. Levels. That's it. It's not rocket science. I looked at this level because I thought they were going to fill the fair value gap that was lingering here, and they did. When I see fair value gaps start to get filled, and then I'm asking myself the question, how come they let such imbalance that should have been the area of strength to not continue up? It gives me a warning that a lot of the people that were here, they took their profits off of here. So if that's the case, psychologically speaking, then whatever bounce that we get here, it might be a struggle for them to get up in here. So right now, I'm staring at this fair value gap that we have here. Let me go ahead and mark this off for y'all. I'm staring at this fair value gap that's right here, and it's bearish. And I'm wondering, now that we have an order block and a fair value gap here, is the bearish strong enough to jab it in the throat and continue to push it down and break this dead cat bounce? Because it's a possible dead cat bounce here. But we'll see. We will see. Anyways, I want you to do me a favor. Go ahead and pull out a pen and a pad because I'm coming in hot with the news. So listen, there's a lot that's going on in the news. These people are doing some very crazy stuff, and I love analysts. But before we get into the analysts, I love to look over what to expect from the financial economic calendar so we can know what to plan for. On Monday at 10:30, we got Dallas Fed Manufacturing Index. Now this one, it says medium. I don't think it really moves the needle too much, but whenever you see those medium, be cautious of them. We got a few bill auctions that kind of throws things around, and the Treasury refunding financial estimates. I think anything that has to do with the Treasury can be volatile. Look out for 3 o'clock and 12 o'clock because, again, people are going to reposition and put themselves inside of bonds, and if they put themselves inside of bonds, things like this is going to be affected. Now, that's going to go ahead and put an effect onto the US dollar. Could the action of the bonds on Monday make this turn into a W and push up? Absolutely, it can. Do I still think that this is more bearish? Let's just say I'm 55% thinking the dollar is going to drop further. But there, I still leave myself for a room in the event that this is going to push back up. I need more information. And that's Wednesday. On Tuesday, we have a little bit of things that's coming in. We got retail inventories, ex autos, balance of trade that's going to be critical. We're going to get jobs, which is the job openings. Consumer confidence is going to go ahead and really mess with us around 10 o'clock. So that's going to probably add a lot of volatility, more auctions. And then we're going to get the Aussies doing a little bit of their things down there that could do some overnights on that Tuesday night. So for my day traders that wants to kind of do their trades in the middle of the night, they're getting some CPI information over there. So that could really give you some volatility to play with. When we get over to Wednesday, GDP growth rate, all that stuff is coming in. We got our PCE and our GDP growth rate, GDP sales coming in. So ADP unemployment change is going to be very critical. That kind of gives you a prelude to what the jobs report can have. So just keep that in mind. And then over here, we got oil inventory. Fed rate decision. Could this be the time when they finally cut rates? They expected a 4.5, which was 4.5 before. If this is the first rate cut and they go to like 4.0, oh my God, the market could rally something vicious. But again, we've been making all-time highs. If we've been making all-time highs, let me go ahead and grab NQ. If we've been making all-time highs and the market has priced in this whole entire action here, we might do a nice little reversal here and just trap all the ones that wants to be bullish after hearing this. Again, buy the rumor, sell the news. And where are you going to get the best information on rumors? These charts. Anyways, moving on. So that's Wednesday. Thursday, we're going to have some European stuff is coming in as well. We're going to get some volatility there. But let's get to the U.S. Employment costs, core PCE, personal monthly spending. Very, very critical information. And the Chicago PMI. Initial jobless claims, to be honest, that 8:30 probably going to be very muted. It's probably going to be very muted because they're going to be more worried about consumer spending. Just keep that in mind, all right? 15-year 15-year mortgage rates and 30-year mortgage rates is probably going to be affected by whatever the Fed announces in the interest rates with the 8-week bill auction and 4-week bill auction. The 11:30, all this is going to play effect. But again, I'm more worried about the personal income. And when that news drop, and again, they might drop all of it at the same time because all of it comes at 8:30. But if they release jobless claims and that thing barely moves, it's going to make me think that as soon as this information prints on personal income, that's the true reaction. That's what I'm going to be anticipating. All right, and then Friday, gotta expand this out. Let's just make sure there's nothing, because again, it's going to be the first of the month. On Friday, we're going to have, oh, but never mind. All of this can get muted as we get non-farm payrolls, participation, Michigan inflation, all of this with consumer sentiment, all of this on Friday could be the setup. It could be the setup. I'm not saying that this is going to dump. I'm not going to say that it's going to pop. But this one right here has done a lot of damage to people's portfolio, and it has made a lot of people rich. So just keep that in mind as we get into making new highs and all of this information coming in. All right, now that we got all this information out of the way, let's go ahead and start talking about some of the stuff that is in the news space right now. So I have CNBC. I love CNBC. For the most part, they give me a lot of information. I just go against them a lot. Because I do believe that they just give a lot of the selling in the most part. But again, you got to read the charts. All right. The breakout in this utilities ETF has room to run, says Carter Worth. He's a chartist. I'm a chartist. I like my charts. Let's go ahead and see what he's talking about. I got a nice little list. It's probably stale now, but just to get a little sense of what I think he's probably thinking. There we go. XLE is energy. XLU. There it is. Trying to jog my memory a little bit. I'm pretty sure a lot of them are still in this sector, but let's just go ahead and see. So we got a couple of them here. I'm going to just go ahead and grab the one that's probably the largest in cap. So we got Duke Energy, AEP, and WEC. So we're going to go ahead and look at those. And then what I'm going to do, we're going to go ahead and look at XLU at the same time. So let's go ahead and do this first. All right. So it's saying Duke Energy, right? So let's go ahead and see what's going on with Duke. It looks like it's been in the middle of consolidation for quite a bit here. Kind of tight here. I like what's going on here. After we broke this pivot here, when they try to kind of push this thing down. Come on, get there. This nice little close above here is what we're using as support here. So let's just say we're going on this monthly, right? And this is the uptrend that it's sitting on. Then that means it's poised for a breakout, as he's stating, and this is just on Duke Energy. Then that means we're kind of going into this wedging action. If anything, an accumulation phase is probably necessary. If I was to get a little fancy, probably anything that's inside of this area, I probably will be adding to a position for the upside. This is 119 and their dividends is $1, almost 1%. Not too bad in itself. So let's go ahead and put you, actually wrong one, earnings run. I want you in here. Dividends, dividends, dividends. Come on, get there. All right, so we got ourselves nice solid added into our dividends place. So a very, very interesting thing. So if we can accumulate over here, that would probably give us some interesting moves to the upside. It's not a growth company, so this is money that you just go ahead and park it. Do not turn around and be like, JD, this thing doesn't move. It's utilities. All right, let's go ahead and keep this list going. Where are you? Did I already get? I had moved it. That's why. What else we got here? We got ourselves AEP. Let's go with AEP. Let's see what's going on over there. And we'll do our top down and line. It looks very similar. Actually, it looks similar, but if you look, it kind of did this, right? This one is already breaking out. AEP is already moving. So if anything, this is still in its accumulation phase. If I was assuming that this is the whole entire area, can you get better prices? Yeah, $98. That would have been great. At almost 1% dividends. It's giving dividends. Listen, nothing wrong with getting things that gives dividends. Let's keep this going. Let's see what else we got. WEC. All right, let's see what you got over here. Same thing. It's similar, right? Isn't this amazing? Isn't this just so completely amazing? Hasn't broke out of its area, so this one's probably going to go ahead and start to make its moves. And when I see things like this, it makes me think that the market and those all-time highs are starting to really show its true colors. That it's almost time for us to start to think of sector rotation when I see something like this. Not saying go run and get utilities, but you might want to diversify. Let's just say you're up 50% of your portfolio and you have this one particular ticker that's up like 25%. Maybe shave it down to 15%, 10% of your portfolio, right? And take that cash and park it in something that's safe like utilities. That way you can diversify yourself. Just something that simple. And then the last one is going to be XLU. This is the sector in itself. It's already broken out. It's already gone, right? I think the reload area was roughly around here. And we're relatively close to it. It does pay dividends, not as well as those other tickers, right? But again, dividends is what you're getting for just parking your money. Not saying that you're waiting for this to kind of grow. So anything under 76, 72 is probably going to be rebuy area for the most part. But generally speaking, I think this thing is poised to do something very fun. All right, Carter. I think you got something for us. I like that. So let's go ahead and keep this news going. All right, so this is what's next. So they're saying the bull market enters the anything goes phase. Should you know? And I feel like for them to make a phrase like that without any on any real thesis in itself, this is just to kind of catch your eye, right? And if you don't have any experience in trading, you're going to go ahead and think, oh, well, I just saw that NQ just made new time highs. That means all I have to do is just keep on buying the dip. And maybe the philosophy is already over. If we go over to the daily, we are kind of doing where we're on an uptrend, but this whole entire thing is wedging. It is wedging. And yes, can it explode up and get into that? Yeah, possibly. But again, sellers has shown that they want to show up here. And then that's when I start to pull one of my favorite tools, which is the ARC. And I kind of ask myself the question, where is the peak? Could this be the peak? Then I kind of readjust it every so often. Like, oh, maybe it's up here. Maybe it's up there. Maybe and I kind of play around with it. And this is what it looks like to me. Maybe around the middle of August, it kind of just comes down. Instead of it being a straight down, it just curls its way over. You know what? I'm going to add this inside of here. Part of my lock. Come on, lock it. All right, there we go. All right, we're going to leave that there, just out of curiosity. Don't just listen to, again, they're saying this thing because bull enters anything goes phase. There's a lot of things that can be, and of course, if you want to read the article, go ahead and get yourself an account with the pro over at CNBC. I am not affiliated. I just prefer it because I like to just look things in its most granular point, and I just don't think of having like everything from Wall Street Journal to Bloomberg and have all that confusion. I only follow what's going on with CNBC. They have a tendency on giving things late, so I always try to go against what they see. And this thing tells me, just by the title, that it's going to be bullish for the most part, and that tells me that they're trying to trap people. So, very simple, okay? All right, so let's go ahead and keep this news going. Here is something over at Oppenheimer. So Oppenheimer is upgrading the most tumultuous, very confusing, and I remember talking to a good friend of mine that trades as well, CVNA, I think it is, right? And he was like, "Yo, Jeff, this thing could continue up," and I'm like, "Wow, didn't they have nothing but scandal?" Actually, let me pull this on a monthly. Didn't they have nothing but scandal? Is this one of those things like I'm getting punked here? Like it just doesn't add up to me. And he was explaining to me, it was like, well, you know, at the end of the day, the chart is the chart. So if they're not respecting the sells, then there's a possibility that it's just going to continue in that direction as much as it can. And that's exactly what Carvana did. If we take mid 2023, when it kind of built this base down here, guess what it ended up doing? It built the base, put this back, and then it literally made a trend to the upside, taking away all of that sell-off that happened after the pandemic pop. Look at that. Pandemic pop, sell off, scandal, fudging the books, all types of foolishness. Rebalance the books, vroom goes down. A lot of the used car stuff and everything else still goes through Carvana. I still don't understand what the purpose of the used car vending machine. I think you can kind of see that inside of that picture. And it's here. It is here. And another thing is, I was confused because, again, a little bit lack of experience. I will not deny that because I'm still learning as a trader. And someone that's trading for multiple decades will have something that they know better than me, which is me that has just over one. That's it. That's all it is. But what I learned out of this whole entire experience is that now I need to actually understand that these lines are sensible. And this is a perfect example of that. So they're upgrading Carvana, which is very interesting for them to do that. This is my monthly pivot. Let me go ahead and see. So we got all-time highs, or we're getting close to all-time highs, I think it was. Let me go back. Yeah, getting close to all-time highs. So I think part of the upgrade is for them to go ahead and test all-time highs. So I do think that Carvana can get into the 400 level. I do think that we are breaking a major trend with a micro trend. And as long as they keep respecting the micro trend, it can overtake our pivots of major trends. So I would be bearish if it gets under 283, and I would be bullish if it gets above this 370, maybe 380-ish, just to be on the safe side. But really, if I want to be risky and have a tight stop, I'll probably be like around 360, 365. Very, very possible. All right, so let's go ahead and speed this up. Let's go ahead and get into the earnings. We got a lot that we got to cover because there's quite a few tickers that's going to be coming in this week. It's earnings season. It gets a little spicy. All right, so the first thing I want to go ahead and break down, it is Tilray. I brought this up last week, and I was like, I remember this ticker. Tilray is probably going to go ahead and continue not to give money to shareholders. They're trying to fix their problems, but they really missed the target last time, and they haven't really given much confidence at all, right? So I think there's going to be a lot of questions that's going to be had. But if we want it to be completely objective driven, we got to look at it in its totality, right? All right, so let's go ahead and get into Tilray. If we look at it, this chart barely has any pivot points whatsoever. It used to be a $300 stock. This thing is completely been destroyed inside of the stock market. Just letting you know that weed is probably not the best sector to be in as people run away from it. But look at this. It's kind of doing this little micro trend right here, like it wants to kind of push to the upside. But again, that 50 on a weekly is probably going to push it right back down. So if they give a nice little surprise, maybe a nice little pop. But again, it is not the safest place to invest in. But it probably could be fun to trade. Another one that's going to go ahead and have earnings is Waste Management. I looked at Waste Management for a while now, and I'm very curious of what's the next step here. I think overall that it's been trying to get some more highs. And there's nobody that does it better than Waste Management. Let's just be honest when it's all said and done. I think it could continue to the upside. If we take the pandemic low, which was this trend right here, we're kind of riding that. Let's readjust for here. We're getting our deviation from that. We're going to go ahead and cover it from here. And I think this is the reason we're here right now. If they smash earnings, I will not be surprised that we start to take over to 250. For tomorrow, we're going to be dealing with some earnings. This is one that I'm literally waiting and watching for, is this one. This is UNH. UNH is wrapped around from scandal. Last week, they made a major drop-off right before earnings because they decided to run their mouths in the news of something that was already prevalent in the news in itself. Back in May, they went and announced that they're in the middle of a probe, that they've been doing some type of medical billing and Medicare fraud. Okay, cool. FBI already said they were looking into it. Then they just went ahead and confirmed it, which is a very weird thing to say. We're confirming the probe. Well, we already know that you're part of a probe, so you're going to confirm the probe. Isn't it like the same thing? Funny thing though, the market dropped something very vicious. So I do think that this is a setup for us to get back inside of this order block, and it might get a little bit of a bounce from here. So we'll see what exactly can happen here. I do think that it can kind of build a W and really go for that 50 moving average. But if that 50 moving average keeps on coming down, I don't know which level is going to protect it, because right now it is looking like we're going to go to like the 200s and things that's under 250. UPS. This is another one that's been beat up. Not as bad as Tilray, but it's pretty much bad. A nice little surprise here would be very solid. They're going to have earnings on the 29th. I have a tiny little position on this, but we could get back to like 113, maybe 117, maybe even get into the doji for 121. That would be great. But again, they have been doing a lot of things wrong. And right now, I think they're going through a labor dispute with their union. So good luck on that. We'll see what exactly happens there. Let's talk about some of the tickers that we're going to be keeping an eye on for this earnings cycle. We already know Meta went ahead and did some of its move, but their earnings is going to be coming up at the end of the month. So I think a lot of action is going to be in place as we kind of build up into it. Still kind of looks like a bull flag, but again, the market can kind of give you a little bit of a right shoulder and drop. I think this is a safer bet as far as popping for earnings because of their exposure to AI, and they might announce something that's going to go ahead and really shake up the market. Right now, everybody's curious about ChatGPT's agent. That's going to be very fun. Another one that we're going to be looking at is Raytheon. Raytheon is just, it's like once, it just can't stop, won't stop. It just keeps on going up. No matter how many times they keep on hitting it, it finds a way to find support and it continues. Had a nice little pop after earnings. Again, their earnings was in line. They have a lot of government contract. Look at this revenue that they bring in. Very solid. Dividends is trash, of course, when it's all said and done. But again, you're not in there for the dividends. You're in there for the fact that this thing can continue to grow in that tech government contract space. Keep that in mind. And then the last one, actually, I got a couple. And we got Dow. So we were talking about Dow last week, and the problem that I have with Dow, come on, get there. Problem I have with Dow is that right now, the way Dow is operating, especially a bad miss, oof, that's tough. This thing's probably going really deep into the OTC. I will not be surprised that this continued to drift to the downside. Had a nice little pop here because they were anticipating that they were going to get back in stride, but for them to miss it this bad in the anticipation that they were going to have some losses here, this tells you a lot about what's going on in the company. They might have to go ahead and figure out what they're going to do with this $10 billion that they generate in revenue and find a way to cut costs. It could be a lot of the stuff that's going on with tariffs that's happening. I did not listen into the earnings cycle, but I'll tell you this right now. Dow is looking bad. There's going to be a point where it kind of keeps its bounce. It gives 35 cents in dividends, but from my understanding, they're thinking about suspending dividends. So make sure you recognize what's going on with the Dow before you jump into it. Well, not the Dow, but Dow Inc. It's two different things. All right, let's go ahead and get into IBM. IBM had a complete gap down. I think this was a massive profit taking. It was looking like a bull flag. That's what it was looking like. I think what they're coming back for, they're coming back to kind of check some of these order blocks and everything else. It didn't miss anything. They're the originators of AI. I think this was just more of a knee-jerk reaction. Everybody else kind of followed through. A nice little bounce off of this area is probably going to be sound. If it gets back into like the 2.4s and everything else, I got a nice little trend line that is the original that kind of started this whole entire thing back in April. And that, like I said, it looks like profit taking. So we'll just go ahead and mark this off. Micro trend has turned around and deviated and beat the major trend twice over. And right now we're looking at this. We may just play inside of a channel until we get to this point. Look out for September 2025 for IBM to figure its way out. All right, that's pretty much it. And I want to say thank you for going ahead and participating with BYTTT. It's fun for me to do these videos, and I have a lot of interaction with some people that follow up with me way after the fact. Like, thank you for some of the information you bring. Look, I apologize if you really think that some of the information probably just steers you a certain way or whatever the case may be. I'm going to give you my opinion because I am not a fiduciary. I'm not a financial advisor. I'm just a guy that loves to look at charts and giving out the information. So I do appreciate all of my 300 and almost 320, I think, or 310 subscribers. And it wasn't easy to get to this 310. But if you find my information very valuable, you can go ahead and share it to friends and family and those that actually trade as well. Because I know I bring a lot of stuff to the table that brings a lot of people that can be very objective driven and understand what the chart is trying to do. And it provides you with a nice footing and foundation. And there's some people that don't like what I do, and that's okay. Hit the dislike button, write in the comments, hey Jay, I think you should do this and that. Or hey Jay, I don't like your video completely. Look, that's just mostly hating, but constructive criticism will be responded to. That said, don't forget down below, hit the like, subscribe, and the bell button, and you will find my charts are still on sale and one-on-ones are still available. That said, I'll see you tomorrow.